On the third Friday in March every single year, SCHD does what's called a Reconstitution. And in case you've never heard the term before, if we think about an ETF as a basket of stocks, a Reconstitution is basically just reorganizing what's in the basket. So every year when they do this Reconstitution, they'll take some stocks out of the fund, they'll add some new ones to it, and they do all of this just to make sure that each holding still aligns with the main objective of the fund, which in SCHD's case is to track as closely as possible the total return of the Dow Jones US Dividend 100 Index. And this index is designed to measure the performance of high dividend yielding stocks in the United States with a record of consistently paying dividends. Anyway guys, in this video I'm going to share with you which stocks they axed from the fund, and we'll also go over all of the new additions that were lucky enough to be included in the holy grail of dividend ETFs. Now in total, guys, 17 different companies were removed from SCHD during this reconstitution, and really at the end of the day, the only reason they'd have to remove a stock from the fund is because it no longer meets the fund's criteria, which they list on the fund's prospectus, which as we can see here, to be an eligible candidate for SCHD, a stock must have sustained 10 consecutive years of dividend payments, it must have a minimum market cap of $500 million, which really isn't that high at all, that's not a hard one to meet, and the stock must meet minimum liquidity criteria, which means they have to maintain a certain average trading volume. From there, the highest yielding dividend stocks out of the bunch are then selected based on 4 fundamental based characteristics: cash flow to total debt, return on equity, obviously the dividend yield, and of course the 5-year dividend growth rate. Now with that said, it seems that 17 different companies no longer met this criteria. That's how many were removed from the fund, with some of the most notable ones being Pfizer, for example, at the top here. This was the 5th largest holding in SCHD and it made up 4.3%. That's a pretty big one to remove. They also removed BlackRock from SCHD, which was the fund's 9th largest holding, making up 3.8% of the fund. Along with that, they also removed Dick's Sporting Goods, which wasn't a huge position in SCHD. It only made up about 0.4%. Along with that, H&R Block was also axed from the fund, making up about 0.25%. So once again, not a big position at all. And then we had LEG, a fallen dividend king, not a big position, only making up 0.04% of SCHD. And it's no surprise this one was removed because LEG cut their dividend by a whopping 89% last year, just a couple of months after SCHD did their reconstitution actually. And guys, here's the full list of removals from SCHD, and I've got to shout out my man SCHD Stan for putting all of this together. I got this from his Twitter page, and I'm actually going to be doing a live stream with SCHD Stan and also my main man Russ tonight, March 24th at 5 p.m. Pacific time, 8 p.m. Eastern time. You can head over to the channel and see the live streams all set up and ready to go. We're going to be talking a bit more in depth about the reconstitution, and I hope to see you guys there. But anyway, in general, guys, for at least one reason or another, all of these stocks no longer met the criteria to belong to SCHD, or at least they weren't as fitting for the fund compared to the 20 different stocks they ended up adding to SCHD, which is what we're talking about next. So like I said, guys, from the reconstitution, SCHD made 20 additions to the fund, and as we can see, here is that full list with Merck right there at the top, front and center, and I had a feeling they were going to be adding Merck to the fund. If we take a look at Merck's share price performance over here on Snapstock, we can see that in the last year, it's seen a pretty decent decline. It's down about 25.5%. So if you ask me, not a bad time to be adding Merck to the fund, and along with the share price drop, that yield has been pushed up nice and high to 3.4%, which I think puts it right in range to be a fitting addition to SCHD. And along with this above average yield, we can see it's about 15% above the 5-year average. We're also seeing some pretty sweet payout ratios here, both below 50% and a respectable dividend growth rate just above 7% on average, and Merck has been growing this dividend for the last 14 years. But anyway, guys, going back to the list, some of the other additions include companies like ConocoPhillips, ticker symbol COP. We have Schlumberger, which is quite a company name, ticker symbol SLB. And then we also have Target, and I knew that Target was going to be added to the fund. That was the one that I was like, probably 95% certain about, and why wouldn't they add Target to the fund? Back over here on Snapstock, looking at the share price performance, in the last year, this dividend king is down over 36%, so a very big drop for Target, and it's really not too far from being below $100 per share, which is crazy to see. But with this substantial share price drop, the dividend yield has been pushed up very high to over 4%, almost 4.2% if you're buying at current prices, which is almost 100% above the company's 5-year average yield. And I think the rest of the stats are looking pretty fitting for SCHD. The payout ratios are in a good spot, both around 50% or below. The dividend growth rate historically has been right in line with what you'd expect from something like SCHD, double digits. And like I said, even though it's not showing it here, Target is a dividend king with over 50 years of dividend growth. But anyway, guys, back over here looking at the full list, we'll see some other pretty recognizable companies that were added to SCHD. We've got General Mills right there after Target. We've got Archer Daniels Midland. And then some of these other companies I know were actually in the fund before, like Flowers Foods was in SCHD before, and I think it was removed maybe a year or a couple of years ago. And the same with FHI, Federated Hermes. I think that was taken out back in 2023. But anyway, guys, those are all of the new additions to SCHD, and this year's reconstitution resulted in a net gain of 3 stocks. And now that we've gone out with the old and in with the new, this is what the before and after looks like for the fund's top 10 holdings. We can see those first 3 positions still are the same: AbbVie, Amgen, and Coca-Cola. But then we see some slicing and dicing here beyond that. We can see that Chevron, which was before the number 4 position, has moved down a notch. We can see that Bristol Myers Squibb has jumped up a couple notches. Once again, Pfizer was completely removed from the fund, so that's out of the top 10. And then we have some other positions here like Verizon, Cisco, and Altria Group changing their position in the top 10 holdings. And then as far as other removals, once again, we have BlackRock. And also, as far as additions in the top 10, we have ConocoPhillips there in the number 8 spot, and we have Texas Instruments, which was already in the fund, but it's now jumped up to be in the number 10 spot. And with all of these changes, guys, it does kind of beg the question, what does this mean for SCHD and for us investors moving forward? Well, honestly, probably not much. I really don't think anything crazy is going to happen from here. I mean, we'll see how this ends up impacting the fund's performance over this next year, but at the end of the day, the fund's main objective is still exactly the same, which is good. I mean, that's why you buy into an ETF in the first place, is because of the objective it's trying to accomplish. And with that, my plans with SCHD are still the same despite these changes. I still plan on dollar cost averaging into the fund every single week to buy as much as I can. And by the end of the year, my goal is to get to 450 shares of SCHD, which I think is totally doable. I'm at just over 350 shares right now, and on average, I'm buying a few shares every week, so I'm pretty confident I could get there. All in all, the goal is to continue just collecting that cash flow, and if you want to see exactly how much money I've made with dividend investing since I started a few years ago, then check out this next video right over here. I've been investing for about 5 years now, and in this video, I'm breaking down the total performance of my portfolio since I started, along with all of the dividend payments I've received so far. So click right over here to learn all about that, and I'll see you in the next one.